In this chapter, we will provide you with an overview of regulation by examining it in an international context. We will then look at the essential role of integrity and ethics in the financial services industry. The risk of losing money from financial transactions has meant that rules and codes of conduct need to be in place to protect investors and the general public. With the development of global financial markets came the need for improved and common standards. The need for international cooperation between regulatory bodies also led to the creation of an international organization, the International Organization of Securities Commissions, or IOSCO. IOSCO designs objectives and standards that are used by the world's regulators as international benchmarks for all securities markets. The advantage of a common set of rules can also be seen in the rationale behind EU directives. European regulators work together to coordinate activities and draft the detailed rules needed to introduce pan-European regulation through the European Securities and Markets Authority, ESMA. Money laundering is the process of turning money that is derived from criminal activities, in other words, dirty money, into money that appears to have been legitimately acquired and can therefore be more easily invested and spent, in other words, clean money. Money laundering can take many forms, including turning dirty money acquired through criminal activity into clean money, handling the proceeds of crimes such as theft, fraud, and tax evasion, handling stolen goods, being directly involved with or facilitating the laundering of any criminal or terrorist property, and investing the proceeds of crimes in financial products. There are 3 stages to a successful money laundering operation, namely placement, layering, and integration. Placement typically involves the placement of criminally derived cash into an account with a bank or other financial institution. Next, layering involves moving the money around in order to make it difficult for the authorities to link the placed funds with the ultimate beneficiary. Layering might involve buying and selling foreign currencies, shares, or bonds. Finally, the third and last stage, which is integration, relates to adding these funds back into the financial system as if they were legitimate. When directors or employees of a listed company buy or sell shares in that company, there is a possibility that they are committing a criminal act called insider trading. To find someone guilty of insider trading, it is necessary to define who is deemed to be an insider, what is deemed to be inside information, and which are the various situations that might give rise to the offense. Inside information is information that relates to particular securities or a particular issuer of securities and is specific or precise, has not been made public, and if it were made public, would likely have a significant effect on the price of the securities. Market abuse relates to behavior carried out by a person or a group of people working together and that satisfies one or more of the following 3 conditions. 1. The behavior is based on information that is not generally available to the market and which, if it were available, would have an impact on the price. 2. The behavior is likely to give a false or misleading impression of the supply, demand, or value of the investments concerned. And 3. The behavior is likely to distort the market in the investments. A good example of prohibited market abuse was the spreading of false rumors in March 2008 about certain companies listed on the London Stock Exchange. It was suspected that those spreading the rumors were holding short positions in the companies. Market abuse is usually a civil offense, as opposed to insider trading, which is a criminal offense. Our integrity dictates what is and isn't ethical to us. At work, there will often be situations in which we are faced with a decision whereby it is not immediately obvious whether what we are being asked to do is actually right. A simple checklist should help us decide. Is the decision or action open? Is everyone whom your action or decision affects fully aware of it or not? Is it honest? Does it comply with applicable laws or regulations? Is it transparent? Is it clear to all parties involved what is happening or will happen? Is it fair? Is a transaction or decision fair to everyone involved or affected by it? A simple and often quoted test is whether or not you would be happy to appear in the media in connection with or in justification of the transaction or decision. For any industry in which trust is a central feature, evident standards of practice and the means to enforce them are a key requirement. To this effect, codes of ethics, codes of conduct, and regulatory standards are helpful tools to achieve an ethical corporate culture. To quote Stephen Green, former group chairman of HSBC, part of the responsibility of top management is to ensure that the culture of the organization reinforces the ethical behavior that is a prerequisite of our industry. The example set by the people at the top will always have a huge influence on how the rest of the organization behaves. To summarize, these are the 5 key points to this chapter. 1. The risk of losing money from financial transactions has meant that rules and codes of conduct need to be in place to protect investors and the general public. The need for international cooperation between regulatory bodies also led to the creation of an international organization, the International Organization of Securities Commissions, or IOSCO. 2. Money laundering is the process of turning money that is derived from criminal activities into money that appears to have been legitimately acquired and which can therefore be more easily invested and spent. There are 3 stages to a successful money laundering operation: placement, layering, and integration. 3. Market abuse is usually a civil offense as opposed to insider trading, which is a criminal offense. 4. Our integrity dictates what is and isn't ethical to us. A simple and often quoted test is whether you would be happy to appear in the media in connection with or in justification of the transaction or decision in question. 5. Codes of ethics, codes of conduct, and regulatory standards are helpful tools to achieve an ethical corporate culture.